Hello traders, it's Monday, January 2009. Markets are slightly down. And if you take a look at this, the Dow down almost 1%, NASDAQ down only 0.26%, S&P down almost 0.5%, and the Russell's down 0.17%. The Russells held up the strongest. Next in line was the NASDAQ. Very good to see on the first trading Monday of 2009. I was watching this like a hawk. VIX is below 40. We're at 39. Very, very nice. So, even though we were in the red, things still continue to look bullish. Because if we were going to fall out of bed, I thought today would have showed its colors. Hey, let's zoom in here. Look at this doji we got today on the S&P. There's our doji. And we're spinning top. There is a small body there, so it could be a spinning top. And the thing I want to share with you is this. Look how the upper shadow tagged the upper trend line. The lower shadow tagged the lower trend line here. And it was perfect sandwich between the two. Did that happen by accident? No. These are the exact lines that I had drawn for, I don't know, a week now. And if you draw your trend lines right, like this upper trend line right there, we come back, there was a swing low here, support, we got support, support, support. Now it's acting as perfect resistance, doing just what it's supposed to. And then the bottom part of this, if you just come across, I'm going to blow this up a little more. This bottom trend line, this was going from body to body, see this? Resistance, and resistance comes across acting as support now. Now this doji or spinning top formation here could be considered a continuation doji, just meaning that if we were to continue to make higher highs here, we could see another extension, more extension to this up leg that we're getting, blowing past any resistance here. We're already above this resistance, which is good to see, but I'd like to see it get over 950 and also this upper trend line, so I'd like to see it blast through there and then pull back, and this trend line acting as a support area where we'd get our bounce. So we'd go up, 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 pull back, and then bounce right there. That would be ideal as far as I'm concerned, in a bullish market. But the other thing a doji can act as is a reversal pattern. It's a sign of indecision. It's a time where the tides could shift. So if tomorrow we close lower than this low, not that we just make a lower low, but if we were to close lower in this, it's a higher probability chance that it will drop down to this rising moving average or this rising trend line here. Now, if we were to break through this support area, and because what should act as support are these rising moving averages, those all should act as support, and this trend line coming up should act as support. This trend line coming down, and remember we drew this to that swing right there, coming down, down, resistance there, and it would come down acting as support. This swing should also act as support, this swing low. If we're to break those, then we have a high probability of a drop down to challenging those lows at 750. That would be an area that I would be looking for a purchase right there, if we could get back down there. All the bears would have their chance to bleed out the market again, and if buyers started coming in, we saw a little pop there. That would that would show us a double bottom pattern starting to form. That would be really nice to see. The other thing that I like here is the MACD is staying above the zero line. That's great to see. I want to see that continue above that. I want to see it stay above those moving averages, and I want to see that we continue to make higher swing highs and higher swing lows. That's what I want to see. But if this dude wants to break down, head down to the 750 area, that would be a time that I'll load back up. Now, I do have a number of very small token positions. To be quite frank, they're so small in position size that I'm not it's not about huge profits right now. It's just about seeing some opportunities out there that I'm picking up some, but they're so small. I'm still sitting on a majority of cash right now, so, and I'm hedged. I have an ES, which is a futures on the S&P. It's an E-mini future on the S&P. I'm short one of those and one position of those, let me be clear, and also have an SDS inverse ETF, or a short ETF. Some people call them bear ETFs, but I have that. So anytime markets are about to close, I like to pick up those hedges. So no matter what happens the next day, I'm protected, and then I unload the weak one. And usually I'll do that within the first hour or so. And if I'm in the futures, I'll do that pre-market a lot of times. So anyway, there you have it. There's your 6-minute video. Until next time, we'll catch you at freetradingvideos.com.